Cash Flow Diary Podcast, episode 457.
Welcome to yet another exciting episode of the Cash Flow Diary Podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leveraged streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cash Flow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, ladies and gentlemen, welcome to another episode of the Cash Flow Diary Podcast. I'm your host, Jay Massey, and I'm glad that you're here today because we have a special show today. What do you mean, Jay? Well, you may not have noticed, but for those of you who are long-time listeners, you'll know that it's rare, and I mean very, very rare, that someone comes back. Well, we're doing exactly that. I have with me today Jake and Gino from episode 267, also of jakeandgino.com. You may know them from their podcast, Wheelbarrow Profits, and a book of the same name. And we're going to talk about something that I think a number of us will want to just know about or think about, or most importantly, let me put it this way. It's something I've begun to do personally, and I want to not only talk about it, but also let you know that it can still be done on a really, really large scale. What am I talking about? Well, what if you could actually go out there and get a significant portfolio of property without having to do syndications, without having to actually do that work that you might be thinking about doing? If it was possible, would you want to do it? Well, these guys, they know how. We're going to talk about that and a whole lot more today. So do me a favor, make sure that you take out that pen, that paper, that notepad, open up those brains, and let's go ahead and let Jake and Gino pour into them one more time. Gentlemen, how are you doing?
Good, Jay. How you doing?
So far, so good. Kind of happy out here on the West Coast where, every day's perfect, right? At least that's what the ads say. But nonetheless, you guys are still out there crushing it, making it happen. Now, as I said a moment ago, one of the things that's interesting to me, I mean, we all know that when it comes down to real estate, knowledge, time, money, credit, these things are part of the ingredients. And I definitely want to talk about that money piece for sure. But before we do so, why don't you guys give us an update on some of the things that you've been up to since the last time you were here?
Yeah, I'll get into it, Jay. This is Jake. Thanks for having us back on. And, we've just been, like you said, we've been crushing it. I don't know at what point we were last time we were on, if we were at, 400 or 500 units, but we're closing in on 1,000 units right now, and it's all our own money. Which is, I guess, kind of a odd thing to do these days. Most people are out there syndicating deals, going out raising money, and the money raising becomes a very large part of the game. But we kind of stumbled upon something that we call refi and roll, and it's basically just we get into the deals, we get the income up, we identify real opportunities, and we push the rents, and then we refi the money out and roll into the next deal. You mentioned about getting in and starting with a certain amount of capital. I started with $30,000. Had $30,000, and now Gino and I control a real estate portfolio valued at over $55 million. So it doesn't take a trust fund, or it doesn't take winning the lotto to be able to do this. But you have to be strategic and make sure you're getting actual deals. You have to be getting deals that actually make sense and they're going to cash flow. And then if you're able to, work a forced depreciation play, you can get the income up and get your money back and put it in the next deal.
So, Jay, let me expand a little bit upon what Jake just said. I think it's important for the listeners to know that we've been able to refinance over $7 million over the last 5 years on our deals. So that $7 million hasn't been used to go out and buy vacation houses and cars. We actually reinvest all that money back into the business, which I think it's a testament to what we want to do. It's a testament to our vision. And it's not about, accumulating toys. It's really about accumulating assets and letting those assets pay you back. But more importantly, what we've really stumbled upon over the last 12 to 18 months is something that I like to call multifaceted multifamily. What we're trying to do right now is we're in a phase where you look at the asset and the investment as the cog of the wheel. Let's start talking about all the different types of revenue spokes coming off of that wheel. Now, what do I mean by that? Buy the asset, 25 units. What did Jake and I do? We managed our own property, our first property. That was the first spoke, the very first spoke that we created off of that wheel. And that was the very first investment we had. Fast forward into the future a little bit, what we ended up doing, we ended up starting a syndication company. We're going to start raising private money. So there's another spoke, another revenue generator. In the meanwhile, over the last 4 years, we created Jake and Gino, which is the education arm. We're teaching people how to do it. We're actually creating educational products. There's another revenue generator. And what I love about education is you get in front of people, you talk to people, you start raising money through people, you start getting all these amazing I learned all about syndication through our podcast, talking to guys who are a lot smarter than me. So you can see that revenue arm is not just about revenue, but it's symbiotic to it. Let's start talking about maybe creating a brokerage company in the next 2 years. We want to start sourcing our own private deals. So, hey, how about the brokerage arm? What about if you're a plumber? You have no money, you can't get into the deals. Well, why don't you find somebody who has an asset, become the plumber, and grow another revenue spoke, the plumbing company or the electrician or the air conditioning guy, whatever you want to say. So that you can see from that one little investment. I get pumped when I talk about this because I
can't tell. I'm sorry.
Yeah, I had a restaurant. But the thing is, like we always look at the short term. We always look at the small pie, right? This pie can be as big as possible, as big as you can imagine it, and take it into other businesses. I can give you the restaurant example. The restaurant is the brick and mortar business. All of a sudden, you start creating YouTube videos on education. You start writing a cookbook. You start having a food truck. You start doing barbecues. You start doing weddings. You start doing physical products. I mean, the list goes on and on. I mean, people get stuck on working in the business. I think people have to start working on the business. I think that's the shift that I think Jake and I have had over the last 3 years.
Yeah. Now, just so you know, when you say pie, I always think pizza. Just
Yes.
be really clear on that, because that now I'm hungry. But it is what it is. It's all good. So there's a couple of things that you said in all of this, and that I want to highlight for a number of people. I've often said where you start isn't necessarily where you stay, and I think when it comes to being an entrepreneur, especially a real estate entrepreneur, I think we all grow in various different forms. And I think what's happening is that you guys are evolving into other things. And it's not like you've left the old thing behind. And it's more about, hey, this is the next step or the next evolution, wouldn't you say?
I agree with that. And I think the biggest step for us was when we created Jake and Gino, two guys that had no idea even what a podcast was. We could barely turn a computer on, right? I'm being totally honest. I mean, we really had no idea. We had problems getting on Skype today, so can you imagine? Right, Jake? And it's funny, but we got out of our comfort zone, and what you learn, you do, and you teach. If you start teaching stuff, right, you have that fiduciary responsibility to learn, and it really pushed me out of my comfort zone. I became a much better negotiator. I became a much better underwriter, and it just opened me up to so many other opportunities. I mean, Jake, what do you think about that? I mean, to us, the education aspect was crucial. It wasn't even about just monetizing it, but just being able to speak to other guys who are so much more high level and seeing the opportunities, talking to a Cameron Harold about having a vivid vision and seeing where we can actually take this. I mean, to me, was like revolutionary.
No doubt. And I think the other thing that I want to get a little cliche for a minute, because you always hear this term, the average millionaire has 7 sources of income, right? Well, if we're being real with ourselves, Gino and I have about 18, not including the little guys that spin off of the holding companies, because you'll get laundry contracts, you'll get cable contracts. There's all these little other revenue generators that Gino forgot to touch on that are embedded within the holding companies, there's cell phone tower contracts. I know, Jay, you're involved in this stuff. But if we just push that stuff out and just talk about our entity-based streams of income, there's about 18 of them. And that's the beautiful thing about multifamily, getting back to what Gina was saying, is it just provides so many opportunities. And I was reading something I saw on CNBC the other day, but they do these things, how, the super wealthy, spend their time. And a portion of it was to creating additional streams of income and different projects that they're passionate about to keep expanding, keep systematizing, their brand and their reach. So that's what I think the multifaceted multifamily is about. Gino said it started with the management company, and then our eyes opened up, and we have total control. It's a vertically integrated business that we're running. It's a family of companies, and they all feed each other, and they all work cohesively together. So it's a really beautiful thing if you can get it up and running.
Yeah, no doubt. I think a number of real estate entrepreneurs overlook those additional revenue streams, or like that's for someone else, and it is what it is. But the fact that you guys are out there and that you're evolving, and I think that's really the conversation that becomes important, is that what is the next step, and to make sure that we're always open to the next step. Now, before we get too far though, I'm sure there's a number of people who are like scratching their head right now going, hold on. He just kind of said it really fast, but did he say almost 1,000 units using only their own money? What up? So, we need to talk about that. And like, why did you choose that? And how did that happen? And is probably.
I'm going to let the G-Dad take this one. He has got a better memory than I do. So I'll let Gino get into this one here.
Well, for me, it was really easy, Jay. I hated my job. I hated the restaurant. I wanted to get out of it. What I really want to do is just to make a few extra bucks. I've got 6 kids, so I've got a lot of mouths to feed, right? I needed to feed those kids. That's the bottom line for me. And I was thinking short term. Didn't go to coaching school, wasn't a life coach yet, didn't think of my big why. So I met Jake. I said, Jake, I need to make a few more bucks. Let's buy a deal together. I don't want to raise any money. I don't want to deal with any investors, just me and you, bro. And that's what happened. We bought our first deal by ourselves. I brought my brother on as a partner because I can't shake him. To this day, I still can't shake him. But that's another podcast.
Oh, that's tough. That's tough.
I say that in a loving way. But I just wanted to get my own stuff. I didn't want to deal with investors. I didn't want to deal with quotas. If Jake and I had a rough month, our septic systems go down. Hey, Jake, we can't draw for 3 months. Great. That's what I was thinking. Maybe I was thinking too short term. I was thinking too much of a limiting belief, but that's how I started. I wanted to have total control and just have a partner. And the great thing about it, guys, is think big, start small. Get into your deal no matter what it is. You don't have to buy 100 units on your first deal. Why do I say that? The momentum is amazing because 3 months after that first deal, we bought a 36 unit. We found another partner. We bought that 36 unit. And 8 months after that, we bought our third deal with that same partner, and he's still with us along on this ride. It's all about the momentum. It's all about the credibility, and that's how we got into it. Like Jake said earlier this morning, I was speaking to him. He asked Grandpa for a $10,000 loan. You do whatever it takes to get that money because equity will make you rich. Transactions pay the bills, but equity is what makes you rich in this game.
Indeed. Now, there's a number of things inside there. Because if you still have to know somebody, it sounds like you're making a distinction between a partner and bringing on investors. I would love for you to clarify that for a number of people.
Oh, well, I mean, a partner is somebody you want to speak to. See, one of the things about being financially free that I found, and fortunately, I got there a couple of years ago. You work who you want to, when you want to, where you want to, and why you want to. Being a partner, you have to find a partner with somebody you really like to work with. I love working with Jake. I mean, it's funny. I was walking with my daughter the other day. She goes, Dad, you always speak to Jake all the time. What do you guys talk about? I said, listen, I love talking to him because every time I talk to him, I'm motivated. We know what we're doing. We're clear about where we want to go. We have weekly meetings, and we've spoken 3 times already today. I'm on the podcast with him all the time. So try to find a partner you really like to work with. Try to find a partner, somebody who has a like mentality, and that's the way I feel about Jake, and I've been blessed that way. So, Jake, if you want to pick up on that, what do you look for in a partner?
No, it's, we talk about it all the time. You want to find someone that has a similar work ethic as you, because if not, you're going to get frustrated. And a similar moral compass. You want similar values, or that's where I think the rubs come in. So if you guys can have a similar work ethic, share similar values, I think it can work out really well. And Jay was kind of alluding to, I think, a little bit more of the strategy from before. So we started getting into these things, and it just came down. We developed a strategy and how we were going to reposition. And it was all about the buy right. We knew that, it's a 3-step equation. It's buy right, manage right, and finance right. And the things you can't really change is the price that you pay for it. So we really worked hard on identifying assets that were well priced, that we could go in and reposition them. And I think that's what allowed us to, get the rents up, force the appreciation, and then pull the equity out in a refinance and roll it into future deals. And we also used some things along the way, creative financing. We did a 281 unit deal, fully owner finance. We didn't put a single penny into that deal. And actually, it was funny. We were at the title company closing the beginning of the month, got the full month's rents back out at the time of closing, and walked away with some other, little goodies there, security deposits and whatnot. And I think it was roughly, it was over $100K that we walked away from the deal with and put nothing into it. And the people at the title company are scratching their heads saying, how the hell did you just do this? So it's making sure that you're financing things creatively. You're stretching every dollar that you can. It was hard work, but I think it was super rewarding. And to Gino's point, he said the equity is what's going to make you rich. I'm an equity hound, and that's part of the reason we haven't syndicated yet, because I've seen what the equity can do for you, and I didn't want to give that away. But I think we have greater aspirations now of growing bigger and to get into even bigger deals, because we see the economies of scale, and that's sort of the direction that we're headed in right now.
Yeah, in general, I think the most important thing, I'm sorry, Jay, just want to mention this. The most important thing about a partner is have the same vision. If Jake is out there fixing and flipping and selling, I can't be his partner because that's not what I wanted to do. Jake hated his job probably as much as I did. He wanted to get out of his 8 layoffs in 6 years. He wanted to secure his financial future, and he saw multifamily as the vehicle. I actually persuaded him. I said, dude, this is where you want to go. He wanted to go into several other businesses, but I said, this is where you want to go. And fortunately, it took us 18 months to find our first deal. It wasn't easy, the first deal. No one was going to tell you it's easy. It was hard. We got a lot of rejection, but we stayed on the path. And we both wanted the same thing. We both wanted to get out of our jobs and create a self-sustaining business and create that generational wealth.
Yeah, totally get it. And those are the things that continually, I believe, bring people to the real estate world over and over and over again. It's because those are the benefits that we're looking for. In fact, I've often said that I think very few real estate investors actually like real estate, like the walls and, ooh, look at this. Mm-hmm. I think we like the benefits that it brings. So therefore we deal with all of those other things that it takes to make that happen. And then eventually we find our niche. We find where we belong, and then we make it ours. And that's exactly what you guys have done, is you've made it yours in so many different ways. Now, all of this talk though, there's probably someone out there who's listening going, okay, hold on. They've built up this portfolio of hundreds and hundreds of units. Why on earth are they going to change that? So I'm just going to ask it for them. Guys, why on earth are you going to change that?
Hello there, entrepreneur. This is Jay Massey, and what I want to say to you is that the number one mistake that I have ever made in business, number one, has been waiting too long to do the books, waiting too long to get the bookkeepers, the accountants, the CPAs, the CFOs involved, and I don't want you to make that same mistake. That mistake cost me over 6 figures, and now for a significant discount, you have the ability to get your books together using FreshBooks. So what I want you to do is I want you to go over to gofreshbooks.com/cashflow diary. Again, that's gofreshbooks.com/cashflow diary. FreshBooks is the easy to use software designed to help you, the small business owner, the freelancer, get organized and save time on invoicing, getting paid faster, keeping those books in order so that it becomes a bonus for you to do your taxes as opposed to a burden. Go over to gofreshbooks.com/cashflow diary and get started today. And now let's get back to the rest of the story.
No. I can get into that a little bit. So it's really, to get really down into the nuts and bolts of it. It has to do with agency debt versus commercial bank debt. So let's get into the real specifics of this a little bit.
Oh, this is about to get good, guys.
This is about to get good, because this is I'm going to swear a little bit, but this is some real shit right here. So when we got into it, we were doing strictly community bank financing. We were unsophisticated to the Fannie and the Freddie, and then we started growing that Fannie and Freddie relationship, getting into agency debt. There was some deals that we refied twice. We would buy them at, say, $30,000 a unit. Then a year later it's worth $50,000. Then maybe we refied it again at $60,000. And this was all with the same community bank, so we weren't getting dinged for prepayment penalties and things. But then we're looking at the portfolio grow, and we're saying, wow, we have all this recourse debt, and we got to start sending some of that stuff to non-recourse. Started developing great relationships with Fannie and Freddie. So we'll still look at a deal, and maybe we'll go in and buy it on the non-recourse side, because we know it's going to be easier to refi it and then send it off to pasture, if you will, out to the non-recourse world. But there's also been some deals we've identified lately where we said, man, this thing works really good on a 30-year AM and a very competitive price, non-recourse financing. So we've actually put some of the money in to those deals as well, which we're not going to get back for 10 or 15 years, depending. We've got 15-year AMs, we've got, terms, 15 and 10-year terms in the agency debt world. So that money's going to be locked up, because we're not going to pay a prepayment penalty. So now what it basically comes down to is we have enough probably powder left, gunpowder, if you want to talk about, to do two or three, probably two more deals right now. If we do those from the jump with agency debt, that money's going to be tied up for a while, so it becomes a liquidity issue. So now that we're getting a little more risk adverse, we've built up this nice portfolio, we're putting it out to agency debt, we're looking at, okay, we want to keep doing this. If at some point, if the more you use the agencies, your capital gets tied up. So that's part of the reason that we're starting to look at the syndication. And we've had a tremendous response from our the people that are in our community. They want to kind of jump on board and do some deals with us. So if $30-40 million deal comes our way and it's going to make a lot of sense, I want to be able to do that deal and not be limited by we were stuck doing $10 or $15 million deals, because that's what's available to us. Yeah. But to expand upon that even further, we're doing a 115 unit deal right now, which is just going to be all our own money. So we're not saying we're going exclusively one or the other, but we're going to continue doing both and just make sure that we can fit, what fits right. Is this deal hey, Gino and I are going to do this deal because it just makes a lot of sense and we're going to do it ourselves, or are we opening ourselves up to some bigger things as well? So it's just making sure we're keeping our options open and going in that direction.
And Jay, I think syndication has a lot of cons to it, but the one pro it does have is, hey, listen, you're able to leverage other people's money. You're able to get 20-30% of a deal with putting very little capital down. That's very attractive. But I have to warn people, from what I've heard, syndication, the model is a little different. It's not really a hold model. People are out syndicating deals and they're looking at a shorter time horizon. They're 3 to 5 years where they're actually pushing up the NOI and actually either disposing of the asset after 3 to 5 years. That's one of the other reasons why Jake and I never wanted to do the syndication. We see the benefits of holding multifamily for the long term. We see the principal pay down. We see the cost segregation, the amazing tax benefits. So we were never totally bought into syndication. So, you have a toolbox, you want to use a lot of tools. This is what we're trying to do. We're trying to expand our tools. In certain parts of the cycle, certain strategies work better. So I think right now, like Jake said, with the overwhelming response from the students, I think it's only fair for us to actually say, hey, let's try this. Let's see what happens. And you know what? Like I said, think big, start small. We're going to start with a small syndication, see if we like it, see if we can raise the capital, see if we can add the value and apply our techniques to it. And if we like it, we're off to the races.
Yeah, totally understood. 100%. Get it. I get it. I get it. And one of the things that I want to underscore for people, actually, before we do that, Jake, I know I don't want to lose anybody. You said something that might have lost a few people. Tell us what you mean when you say agency debt.
Okay, so there's this quasi-government private sector world, and that's all I understand about it. So there's some.
Yeah.
Okay, Fannie Mae, Freddie Mac has some really great multifamily loan programs out there, and there's small balance ones that are up to $5 or $6 million, and then there's some standard programs that are above that, and they give you really great terms. You're going to get 10 to 15 year fixed money on 30-year amortizations. They're going to be non-recourse. The rates are going to be extremely competitive. You can get interest only for 1 to 5 years in most cases. Sometimes I've even seen guys going out to 10 years if they really want to push it. Not something that we're engaging in, but it's really just great financing that's out there. You have to be in the game for a little bit. You have to get your key principal card at some point, I guess they're calling it. And it's I think the place where you want to be. The best to me that I've probably seen is there's these HUD FHA 223Fs, I think they're called, where they're 35 years, just like a home loan. They're 35. So it's 35-year term, 35-year AM, full thing, no refi, no nothing. If you're true buy and hold, that's the place to be. But there's things there that come with that. 6 months probably at least to get the deal done. They're going to let you draw twice a year, so your money's really going to be tied up. You're less control over the asset. Haven't gone there, but we want to push the term, right? We want to get that term lined up as close to the AM as we can. That's why we've started doing some 1530s, 15-year term with 30-year AM with Fannie. So that's a one refi play after you send it to those guys. So we're comfortable with that, and that's sort of how we're using the agencies currently.
And Jay, let's talk about the community financing. That's where we started.
Sure.
And that was our bread and butter, and that still is our bread and butter, because they're very flexible. They don't want to know what color underwear you have. They don't want to know everything about you.
Right. Those applications are insane. Sorry.
Yeah, no, I mean that's the reality of it. If you don't have a big staff and you're doing it by yourself, our community banker right now is giving us 15% down. So we can put down 15% on a property because he knows our underwriting is spot on. He knows that we're going to add value, and it's just great. It's so easy to actually go down. I know Jake loves it. I mean, he goes into the guy's office, anything he needs, it's awesome. So community, if that's where you're starting, I would start with the community, and I would always have a great relationship with a small community bank who's hungry, who likes to do multifamily, and who you can actually network with and just build that relationship, because they're an awesome team member to have.
Indeed. Now, one of the things that I wanted to highlight, especially as for those that are listening and getting excited about some of the things Jake and Gino are talking about, understand your experience history, that resume, what you've done in the past, is going to factor significantly in your ability to even come to the table with stuff like this. This is not the type of financing that you go, hey, I got an idea. I'm going to go, get one of these loans. That's just not the thing. You experience history, your resume has to be there too.
It took us like 3 or 4 years, Jay, before we started using agency debt. We had I think we're up to like almost 700 units before we even did the agency loan, and it was a refi. So
yeah, and even better at that point, because he's starting with a refi is in theory simpler.
No. Listen, here, this is important for folks we want to talk about this. You want to start like personally, like if you go to agency debt, say you're doing community bank, doing a refi is way better, because we just did a agency purchase. It wasn't a refi. We went with Freddie Mac. It was a new buy. We just closed on earlier this year. The survey, there's boundary issues and things like that. The thing we almost lost our rate. We would have, but it was, rates have been moving up, as you know. So it would have cost us like 50 basis points if we wouldn't have not got this thing closed. Surveyor came through, it was a hell of a ride. We got through it, but man, that one little thing held it up, and we almost blew our deal up right in front of our face. That's why starting with the agencies and refi, I love refining to the agencies. There's some deals, especially if you're doing a syndication, it makes sense. You got to go from the jump, but getting your feet wet with a refi, I would definitely suggest, because you're not asking someone for data. You have all the data and you're supplying it. Because the thing is, when you're doing a purchase, you're asking the seller for data. They got to get it to the bank, Fannie, Freddie, whoever you're using. It's not on you. It's easier if you're supplying it and then you go through it once. So I would, my personal opinion.
No, I don't disagree. It's just I just don't want anyone thinking it's going to be easy either way. It's still
brain damage
either way, no doubt. So I just want them to be very, very clear on that and understand what they're getting into. Now, with all of this being said, what are some of the types of projects you guys are looking at, and where you want to take things?
Before we get there, I think it'd be important for Gino to talk about credibility books and sort of what we do, because you talk about the challenge of getting these things in. Gino, you want to touch on, how we've used credibility books a little bit to lighten the load and build rapport with these folks?
Yeah, sure. I mean, basically, when we started, we were just like everybody else. We had no credibility. Y'all ain't going to do business here. We heard it all. We want to sign exclusives, and it was hard. I mean, we finally found the broker who spoke our language, who took a chance on us. And like I said, that first deal was vital for us because we created something called a credibility book. I mean, I can share it in your show notes. It's basically a business plan book. For ours, is about 20 pages long. What we ended up doing was we created the book, and we call it Mom and Pop Investing, Mom and Pop Apartments. That's what our brand is. We invest in mom and pops. And the credibility book outlines our investment strategy, how we refi and roll. It outlines the market that we're investing in. It gives brokers an acquisition criteria of what we're looking for. We're looking for C properties that are maybe 7 caps. We're looking for a certain cash on cash return. And in there, we list all of our portfolio. We have every asset in there. So the banker or the broker can actually look and see what we've accomplished. So on our third deal, when we actually went and we bought 136 units, we had 2 smaller deals in the credibility book. And I remember Jake saying he brought it to the table, he gave it to the banker. In the credibility book, it had our other 2 properties listed. It had the problems that we had with the property. It had our solutions. It had everything that we documented in the deals that we had, all our successes. Jake throws it on the table, and the banker's like, wow, I've never seen something like this before. So guys, it's all about being prepared. It's all about showing your credibility. And I think that actually really helped us out. When you're going out to a market and you're meeting a broker or that potential partner or investor, have that business plan, have it thought out. And a lot of people don't have it. The majority of people don't have it is because it takes work. It takes time for you to think on how to build one. But I can guarantee you, you have one of these things, you're going to stand out ahead. And, broker's going to take you seriously.
Yep. So yeah. The showing that you, just the level of organization. I'm chuckling because sometimes we want to talk our way through, but it's like just showing that you took the time to even compile this data, that you have this data. It just says something completely different. So many less questions are likely to be asked simply because, they were actually prepared. This is not their first rodeo. And it's not going to be like pulling teeth to get the information that I need. Totally understood.
So Jay, I apologize. You were saying?
No, well, what I was saying was I was kind of curious as some of the new transactions. Okay, so if you're going to take, what you've done in the past and now you're ready to expand into the future, share with us some of the new things that you believe you'll be able to do. Like, what's the future look like for you two now that you're exploring new things?
Yeah, I'll jump into this. So we're gonna eclipse with this deal that we're working on right now. We're gonna eclipse 1,000 units. So we're at 909 right now. We're going to be closing on 115 units. So that'll put us over 1,000 units with no syndication. So we're pretty proud of that. We're working, like Gino said before, about the brokerage. We're going to be, over the next 2 years, starting a brokerage company where we're going to be able to go to owners and say, hey, look, we're willing to buy your property for a reasonable price right now. If not, look, we can help you sell it because we're only multifamily. Multifamily is all we do. So there's that arm of it. We're getting charitable. This year we're going to start one of our companies is Rand Property Management, and we have Rand Partners, which is we're working on with the syndication. We're going to start something this year called Rand Cares, and it was just something simple. We're saying, hey, what's a great way for us to give back? And I just thought, one thing that really just stings is thinking about kids that are hungry. So let's start some food drives. Let's start this thing small. I'm sure it'll be like everything else we do. It'll start small and then blow up. But we're going to start giving back and starting food drives and finding ways to feed hungry kids. So that's one thing that we're both very passionate about that we're building on this year. We're definitely going to syndicate a deal before this year is up. So we have that in the hopper. And I think from there it's going to be going to we're sitting right now, like I said, going to 1,000 units. I think we'll go from there. We'll go to 100 million in assets under management, and then we're looking at the big B, right? I guess the next stop after that is the Billy. So we got to get that off the bucket list. So that's where we're going.
Totally like it. I didn't hear any restaurants in there.
No.
Listen, I'm in Knoxville here, and I'm still trying to find a pie, as Jay said earlier. So it's very hard coming from New York, moving to Knoxville, and being a lover of pizza. So maybe there is something in the works, and we'll see what happens.
I'm just planting seeds for myself, man. That's all I'm doing. I'm just planting seeds. I'll let that sit, and then who knows? Maybe you'll figure it out. You're like, this commercial building over
Mixed
here.
use.
Yeah,
Mixed use.
there you go. See, there it is. The seed has been planted. I'm just trying. All right, now for those that have been listening for a while and want to find out more about what you guys got going on, what's going to be the best way for them to track you down?
You can find us at jakeandgino.com. That's the easiest way to do it. There you can find the podcast, the Wheelbarrow Profits podcast, Wheelbarrow Profits book, and also randpartnersllc.com. If you want to take a look at one of the syndications that we're going to do this year, you can go there and get more information.
And I think the last thing is, Jake, we're having a live event in October, the 6th and 7th in Nashville. We had one last year in Knoxville. It was really well received. We had about 200 people. This year we're focusing between we're looking at 350 people in Nashville. It's the 6th and 7th of October. And listen, no pitch fest. It's all multifamily. We love to give back to the community. We want to get all our vendors there. We want to get our operators there. We're going to have our management team there. We're going to be teaching about buy right, manage right, and finance right. A lot of syndicators. The speakers are awesome this year. We've got some really fantastic speakers, and we just want to network with the community. It's fun, Jake. Isn't it a lot of fun? I get up every morning. I hate the weekends. I love to work. I love to be on these calls, and the construct of the 5-day, 2-day really becomes apparent how crazy that really is. Every day, you should be thrilled to be getting up on a Monday morning and saying, "This is not work. There's no such thing as retirement. We should not be planning for retirement. We should be thinking about continue to work and continue to grow and to contribute in life." So that's where we are, right, my friend?
It's the family reunion. After the event last year, everyone said this feels like a family reunion. So that was very
that was very inspiring. Cool. You're right. That was inspiring to me.
Excellent. So I want to end with a different version of the question I tend to ask a lot. So, it's been a while since you guys have been here. Clearly, you have evolved. I'm going to venture to say that there's a listener out there who heard you guys the first time you were here, said, "Ooh, you know what? I kind of want to do this thing, this real estate thing. This is going to be awesome." But yet, now that you're back, they're still listening going, "I haven't done anything." And what I want you to do for just a moment as we end here, give them a little pep talk. What do you think is going to help them?
Education times action equals results. It's great to go out there, listen to podcasts, read a couple books, but guess what? I knew nothing when we started, okay? I went out there, kicked down doors, made broker relationships. Guys, education is important. We're in the education space. You need to know something, but I had my G-Dad, riding with me side by side, so I was covered, okay? You got to get out there and take action. It's the most important part of the equation. You got to have the education is important because you don't want to be out there sounding like an idiot, but action is going to make you wealthy. Go out there. The more deals, we got guys in our community right now that are putting a ton of offers out there, and guess what? They're closing deals. You can't get caught up in the paralysis by analysis. Action is going to really be the thing that drives you. You can't be afraid. You got to bite the bullet. And here's the thing. This stuff is not rocket science. I'm not, the smartest guy in the room. Gino's not either. It's not rocket science. You'll figure it out. Follow the framework. Buy right, manage right, finance right. Know your buying parameters, and that's it. If you sit there and just listen to it all day and you don't take action, nothing's going to happen. So.
Jake, from my standpoint,
mm-hmm.
why I became successful around 40 years of age, I just had enough. I was fed up, right? I didn't know what my why was, and when I focused on what my why was, all of a sudden the objections started disappearing. I made it my mission in life. I was moving away from pain. That was my motivation. So, guys, maybe you don't have enough pain in your life. I did. I was going through life. I was rather comfortable. I was making enough money, but I said to myself, I'm not growing. I'm not contributing. I mean, is that what life's going to be all about? I'm going to be 62 years old, retire from the restaurant. I didn't want to live like that. I wanted to be able to get up every morning, have fun, enjoy my life, have these substantive relationships. And if that's what it takes, guys, focus on that. Don't focus on what you don't want. If I ask you something and you say, well, I don't want that, that's where I was in life. Once I figured out what I wanted, all of a sudden I said, wow, multifamily can get me there, or whatever aspect you're in. Oh, stock trading can get you there. Just I'm going to let you guys know one thing. Multifamily is the right vehicle to make you financially free. And then once you're financially free, continue to do what you love to do, right? Because we always have this saying that, people follow their passions, right? Well, you know what? You're a karate studio. You're following your passion, become a karate. You know what? That's not going to make you wealthy. You have to follow a vehicle that's going to make you wealthy, and focus on your why. Because when you have those potholes in the road, you're going to be able to deviate from those potholes and say, listen, messed up, it's going to keep you going. Because what happens is, if your why is not strong enough, you're going to quit after a little bit. And I quit back in 03, 04 because my why wasn't strong enough. But as I was getting older, had more mouths to feed, and figuring out that I just, you know what, life is finite. We're not here forever. Let's do with whatever time we have. Let's do the best we can. So that's what happened in my life.
Wow. And I love it. I love the evolution. I love the change. I love the passion, the desire. We can still hear it. It's almost as if it's still day one. I definitely, again, appreciate you guys taking the time to come back here and share your insight, your wisdom, your evolution, your growth, your change, and the new things that you guys are doing, and letting us know about it here at the Cashflow Diary.
Put in offers.
Yes. All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. What does that mean? That means get over to jakeandgino.com. That means look up brand partners. It means do something. Don't just listen. You've listened now. You've heard now. You can go back to episode 267 and hear the difference between the two. You'll hear the same passion, but yet there's more experience. There's more knowledge. And you know what? The only difference is that it can be you. You just got to go out there and do it. No time like the present. Ladies and gentlemen, it's been fun talking to you today. I look forward to talking to you soon. Until next time. All right. That was good.
That was great. Thank you. Thanks for having us.
Yeah, you're welcome. You're welcome. Keep going out there. Keep growing, changing, becoming something more. These are all good things. Oh, for sure. And yeah, we'll get to the post-production and all that stuff and let you know when this goes live. Any questions for me?
No, thank you very much for your time.
Yeah, anytime. I'll talk to you guys later.
Thanks, Jay.
All right.
See you, man.
Bye-bye.
Bye-bye.